Index swings continue to baffle traders. 10-year Treasury continues to hang around 4%. This is causing high yield to be stagnant. High yield is certainly affecting the tech market. You can see here with NASDAQ how we're just bouncing around. One key indicator that's saying we might be time for a rest. How to trade Tesla tomorrow for Investor Day. Why Nvidia is plummeting after hours. Several other names we need to go over, but let's just start getting right into it. Here's our trend line on the S&P, and we're going to draw this about as clean as we possibly can. So we have this area right in here that we just keep dealing with. And we can see doji after doji in there fighting right along our trend line. Now, the concerning part of this is that we now have 3 closes under the trend line. That is not ideal. That means for the past 3 days, we've tried to get above our trend line, and we are not able to do that. For those that are new to the channel, you will note that when I trade, what I'm really looking for is I'm looking for what is actually happening, not what I think is going to happen. And the reason I say that is because over time, your opinion on what's going on out there can change, and you have to be open to that. Now, if we take a look at this particular level, what is becoming concerning is the complete lack of rejection of my trend line. And you can see how almost perfect we drew it and how we are rejecting right up into it now. So in other words, we've gone from the open and opening on it to hanging around there to the top of that trend line is now becoming the high. And now we're below this wick, which means today, the fact that we are below that wick, that means that we had more selling. So you had more selling today than you had yesterday based upon that particular move and that particular close. Now, I have a shooting star, and then on top of that, I am below my 55 and I am below my trend line. That is where we're at right now, and that is what we're dealing with. 200-day moving average sitting right there. So we're kind of wedged in here. Now, I don't know that we're going to fall off a cliff. I don't know that, right? No one really knows what's going to happen. All I can tell you is that we're starting to see signs that we're getting tired. Now, one of the graphs I use from time to time is New York Stock Exchange net high and low percentage. It's a great graph, and really what it's doing is anything that is over here, you have your New York Stock Exchange net highs, and they are going to be over 0.1, and then anything where you're down below this level is extreme. So you would have extreme pessimism down here and extreme optimism up here. Now, the beauty of this system is by going through the net new highs, you know when you're hitting new highs and new lows. There are also other ways to utilize this information. By drilling into the information, you can start seeing a very particular pattern. And the pattern that I'm going to point out is just the fact that every time that we are either getting above the zero line or below the zero line, you will note that you will see certain movements. And those movements, for example, here we got below the zero line, and that became an issue, didn't it? So we want to watch this really closely. Like, we don't want to be this person who's just sitting there knowing that this is something that we should be paying attention to. And you just want to make sure that you go through when you're looking at data and making sure that you see example after example before you go through it and say, hey, maybe I have something. And I would suggest that maybe by looking at these points, this is an area that we should be paying attention to. Obviously, above is the S&P and below is New York Stock Exchange net high-low percentage. What's troubling me is that we're sitting right on that line. You can see the zero line right there, and now we've hit it twice, and we just really want to be aware of it. It's not something that we should feel. So we really want to watch the zero line, and we can see that we've now hit that area twice. And that's not something that we want to see. So we're really going to have to pay attention to this. Now, if we start to roll again, then that means that we might be in jeopardy. And we can kind of see how this is playing itself out and see that move from December. And we can all remember what happened during December into January. And then we can see the run from January on, right? And from that run on in January, just so we're clear, we were above the zero the entire time. And now we're starting to test that zero, which means, very simply, the percentage of new lows might be greater than the percentage of new highs. That's not what we want to see. So while I'm not sure that we're going to break the 200 or stay below this trend line, but the longer you're here, the worse it gets. And we're starting to see the breadth of the market get worse. In other words, the names that are rallying are selective. Now, going straight across on the NASDAQ, we can see our level. It's glaring, right? And that's a level we have to pay attention to. 293 on the Qs. We've just been riding it the whole time. Now I'm leaving in the 200 right here. Now if we move that line down to the 55, you can see we're in much better shape here to hold this area than we are really in the S&P. So it's becoming an issue, and it's something where we need to watch and make sure that we're going to hold here. I want to hold in here, but I don't like what I'm starting to see. I don't like to see the breadth that I'm seeing, and I don't like that I'm getting these bars that are extremely wild. This volatility is starting to become concerning. Now, if we take a snapshot of the NASDAQ since the 17th and just use the Qs, you can see the gap ups, the gap downs, and we're not really filling them, which is somewhat fascinating. But what we are doing is we're always getting back to that opening price at one point or another. Wherever that opening price is, we're usually challenging it. You can see that that really didn't happen here, and that's pretty much the only time it did not happen, right? But as you start going through this, it's pretty interesting. So in other words, all we're doing is rallying, getting back to that level, that open, and then we're either going up or down over it, or we're just stopping there. So in other words, here's the open, and that became the high of the day. Here's the open, that became the high of the day. Open, see where I'm going with this? So we're seeing this pattern over and over again, but we're not filling in any of these gaps. We're not filling them in to the downside. We're not filling them in to the upside, right? You're in the middle of it, but you never really truly gap filled here. And I think that is pretty interesting. Now you have here, you didn't really do anything up here. It's just an empty gap. It's an empty gap up here as well. So this is very abnormal. This is not something that you normally see. You normally would gap fill, retest that level, see if those buyers are there or sellers are there, and then move forward. Now, this is a proprietary indicator below that I actually created. Very simply, the blue line is what's going on above us. The red, yellow, and green are simple moving averages. This is the 8, the 5, and the 3. And it basically shows how they're acting in regards to a 15-minute chart. Well, I don't want the 8 to be up top, and I don't want them to be set up this way. I don't want red, yellow, green. In other words, if you see red, yellow, green, you would refer to a traffic light, right? What would you do at that traffic light? You would stop. So this is starting to give me pause since Wednesday, and it's something that I'm aware of. Now, when you see these kinds of crosses, you want to pay attention. You don't need to act on them. But what's bothering me here is this is getting worse. It's not getting better. In other words, the 8-day is starting to become an issue. We're starting to slope with the 8-day moving average. The 5, we're starting to battle, and we're having periods as of like today where we're closing below it, sitting on the 3. This is not what you want to see. I created this as an indicator because it's easier for me to look at this instead of having it glaring up here, and then I can just use it as a reference. So now we're watching what's happening up here with the 10-year, and we can see that we're not really rolling back down. And the 10-year is not really my problem. My problem is high yield, and the fact that high yield is not dropping anymore. If high yield stops going up, there's no way the NASDAQ is going to go up. We need people to want to buy bonds. If they're not going to buy bonds, that's going to be a problem. It's definitely a problem if the dollar is dropping and we're not seeing bond market move on that. There are two things that we have to go over in regards to the chart in front of us. Number one, the dollar is what's in blue. Number two, in orange, you have the 10-year treasury yield. Number three, you have high yield in light blue. You can see them right over here. Why is this important? And look at the time frame. It's 240 minutes. It's not a daily chart. So we're drilling into this a little bit to talk about. Now, you can see the dollar right here, very clear, rallied up, and then obviously market moved higher. But there's that spot right there. And look at what the dollar did when it hit there. We never rolled. We never came back down. In other words, when the dollar got weaker, they didn't really feel the need to panic and buy treasuries. That's a red flag. And that's something that I'm watching. Because when the dollar's been dropping, they've been buying bonds. If the dollar's dropping and they're not going to buy bonds, that's an issue. The other thing that I'm noticing is that if we take a look at the high yield space and we look over here from that high yield from that particular day, and we look at this low, and then we look at the dollar rallying, and we look at what high yield's doing here, it's not even paying attention to it. It's not even acting on that. It's just starting to curl down. As the dollar dropped, high yield did nothing. So this is becoming somewhat concerning. I'm seeing somewhat of a disconnect, at least in the short term, in the high yield market, in the treasury market, and with the dollar. Once again, I'm not sure how bad it gets. And I want to be really clear about that. I'm not so sure that we get down to this level in the S&P. I'm not so sure that what I just showed you does not correct itself. Even when we went over the sentiment indicator, I don't know that we're going to break the zero line. So it's important for us to note all of this. For example, if I look at this MACD on a 4-hour, you can already see that the histogram is getting stronger and stronger and we're starting to go sideways. So is this going to break down, or is this going to start curling up just like we did here and just reverse all of this over the next couple days? I don't have an answer. I can only tell you that the breadth is getting worse. And that is where my concern is coming through. The other thing that I would say is they're trying to break the market and they're not succeeding. For example, if you take a look at Tesla on a 4-hour chart, you have the investor day tomorrow, by the way. You're going to want to watch this. It is usually a sell the news. Everybody's waiting for the next monster truck or cyber truck, and then everyone's always disappointed. But if you're looking at Tesla today and you're looking at this 4-hour chart, they're just not able to crack this. This is the cup. This is the handle. We did not get below the handle. And I really want to stress that. So we have to see what happens tomorrow with the name. But looking at this on a 4-hour chart, you have good news. You can easily get back up to here. I mean, that is not that far off. These dates are not that far off when you're looking at them. 224, 237. They're not unrealistic for us to have some kind of rally. If someone told you that NVIDIA was going to get all the way up to that 230 level again, when a couple months ago in November, December, it was acting like it was never going to make a chip again. So you have to take this into context. Now, after hours tonight, we should note that NVIDIA issued a shelf warning. Now that issued a shelf. Now what that means is that they're going to go out there and essentially raise capital, probably through some kind of convertible, maybe stock, maybe and bond offering. This will drop until it prices. So this is going to be really hard to buy until that prices, and that's why you're dropping the way that you are right now. It's probably candidly one of the reasons why you got up to this level and then just clearly rejected. What I'm not crazy about as well is now we're seeing large companies come out there and use the current situation to raise capital. So I find that interesting, and that's not a great sign. You want to see insiders buying NVIDIA. You don't want to see them coming out with a really good earnings quarter and then using that to their advantage to go and raise capital. That's not the best sign out there. So it's a concern of mine. We have hit this level 3 times now. We're unable to break it. And so I would wait for this to price and then see how it acts from there. In regards to Zoom, if you take a look at what's going on in these particular levels, I really think this is pretty staggering. So I actually thought we'd get more of a pop out of it. I'm going to just be honest there. I think we would have gotten more of a pop. Solid report, and you're just hanging in there. Don't sleep on this. You're watching a lot of these names start to rally. And then what they're doing is they're going sideways, and then they're starting to move again. We had a really nice trade in Meta today. And again, for me, I really am trying to get in there for more of a swing trade. And you can see right here how we just kind of broke down once again right through that level, and that was enough for me. And then of course the next day, now look at that move. That move's beautiful. And I think that that's really what you're seeing here. You're seeing a test and then a reset, but we're not really falling apart here. And I think that's the point that I'm getting at. This is the issue. I can look at these kinds of names and I see that they're breaking out. At the same time, I'm seeing signs that the indexes themselves are looking weaker. So I'm not really sure how this is going to play out. So we're going to have to watch this very closely. But if this starts moving the way that it looks like it's going to move, and we can get above that little wick right there, and you start getting over 178 3/4, you're probably going to go back and retest the highs up here. So this is on my radar. It's definitely one I'll be watching tomorrow. Coin's announcement, they're getting rid of the Binance token due to regulatory concerns or liquidity concerns, seemed like something that was more done to just appease everybody, right? And then we have the Forbes article that came out on Binance and how they may have tapped into customer funds to shore up liquidity, which is exactly what FTX did. That's a really big problem. And Coin can benefit from this. Coin may be the last one standing. So this is not something that I'd be real careful here in shorting this now. until you see news on this one in particular, I'd be really careful because there's no one really left. If Binance is either strangleholded from having any kind of footprint globally, there really will be no one left of the magnitude like a Coinbase, and that's going to be really important. So I would watch this very closely. Today's activity really reflected that, in my opinion. You can see for the week how we've been basing, and then just off that news we just ripped. And frankly, this is just people that are short as well as new net longs coming in. I mean, it's a very different story now if Binance has a problem and Coin is the one that is the most regulated or the one that people are the most comfortable with. There's really no one left. You know, you just had Robinhood just got served a subpoena by the SEC over FTX. Technically speaking, it's going to be really hard for this to break with this kind of news outstanding. It's going to be very difficult. Now, Rivian after hours, you have some issues there on the delivery and production side. You can see that revenue missed. Nobody wants to see revenue miss on a growth story. They did cut expenses, but the stock's down about $2. What I want to see is I want to get below that doji tomorrow. If I can get below that 17, there might be a short here that would interest me and see if I can get back down to that 15. Looks like it's a little lower, about that 15. It looks like 15.28. First Solar with a really good report. Revenue missed a little bit, but earnings and the cutting costs over 58% surprise was huge. Conference call went exceptionally well. Stocks trading near highs. This is one of those stocks that you just really have not seen any kind of weakness in the market. It just continues to be strong and it continues to push. I would just watch that DTL real carefully, this downward trend line right here. And if you flip this, this might be something to pay attention to. It looks like right now, candidly, we're sitting right underneath of it. So I'm going to watch that level tomorrow. This is usually where we get excited and then it hits a level like this and then rejects. If you like the longer format, please comment on it. Going over some of these indicators that I've created or other indicators. The reason I'm doing that is because of your comments. So your comments are greatly appreciated. If you're interested in following along on what we're doing, the Chasing Alpha newsletter is free, and there is a link in the description to get it. Everybody have a great evening. Trade to win tomorrow.